Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I bring to you a stock that could become 3x from here in the next 3-4 years, 2 to 3 years. That's VENKYS India, which has come out with very strong September quarter numbers. So let's understand about the business and let's understand what lies ahead. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about VENKYS India, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from now and then. And the watch list has around 70 stocks in which there are buying ranges, exit ranges, and what lies ahead for the stock technically. That is also there from a 1 year perspective. If you want detailed company talk or something like that, you can directly email me. Now about VENKYS India, it provide poultry products in India and abroad, and they also have packaged food products. So packaged food brand has been doing well. It did well in 2016, 17, even in 18. But the poultry product and exports did not do that well at that point of time in 18, 19, and that's why the stock fell sharply with the mid cap selling off. They also produce feed supplements and vaccines for animals. It is a part of the VH group. If you look at the numbers, and this is interesting, so sales were down 16% in this September quarter, but the profit surged 277%, and that just tells you the operational efficiency of the company. The company was doing around 13 to 15, 18 crores net profit every quarter. This time around, it has come out with 36 crores of net profit versus 13 crores of net profit in September last year, where things were normal. So you can understand that not only the profits have recovered, not only the business have recovered, it is surging. And I'll give you the reasons later on, but that just tells you that some of the companies in this online domain, in this delivery domain, is doing even better than what it was doing before the pandemic, are doing even better than what they were doing when normal services were there before February, January, February. And that is the case with every catastrophe, that there are companies, there are sectors that come up from nowhere, and they do extremely well going forward, say 2 3 4 years down the line, and they'll continue to do well because of the change of habits, etc. I'll discuss that as well. So basically, profits have surged 277%, but the stock is still down 65% from the peak of 2017, where valuations were very stretched. But here I believe that the valuations are attractive. Yes, it has the stock has surged a lot, but we'll discuss how to go about buying this company. Margins have improved dramatically. So if you just look back, so 13 crores over 800 odd crores of sales versus 36 crores of net profit on 700 crores of sales, there's a clear you can say upsurge in the margin. Plus there is high promoter and institutional holding. So overall, as far as the September numbers are concerned, things are looking extremely good. So yeah, let's look at the performance. So stock did really well from 2014. So it came into limelight from that 2013-14 period when the market surged from 5500 Nifty, 5150 Nifty. I remember in August 2013, and probably for around 3 4 years it did extremely well, and we saw that the stock went as high as 4600 from about 2 300 rupees. That's an enormous surge that the company had. Numbers were also uptrending till then as egg prices soared. At that point of time, egg prices from 3 4 rupees soared to nearly 7 8 rupees, nearly doubled, and they were selling more across the board, etc. But the stock started declining with the mid cap sell off in 2018, and for 3 years it has been absolute carnage for the stock for at least 2.5 years. It culminated with a nosedive in February March fall, where the stock fell to nearly 600 rupees, just below 600 rupees from 4600. So if you just look at its charts, if you just look at some of the companies that have fallen dramatically in February and March, you will understand that not everything goes down forever, especially those consumption companies. And that's why I keep stressing the fact that buy businesses which deal in cash, and buy businesses which can come back with an upsurge in consumer demand. And that is what has happened with Venky's. And just one big quarter, and you see the stock from 600 is now at around 1600 or so. It has already more than doubled. It has recovered more than 150% from those lows, and numbers have stabilized, and they are becoming stronger. And that has been the change that has taken place over the last 1 year. I did put up a video on Venky's last year, and it was an avoid, but it is not the case right now with the kind of numbers that it has produced. So what were the reasons for the decline till March? So just let's just go back to 2018-19. So it was the part of the ASM list in 2018-19, and that was a real drag for many mid and small cap companies which are even good, even very very stabilized, like FL. There were others, and I talked about Tanla also earlier, and others, Kilpest and so on and so forth. All were taken into consideration for ASM, and many hundreds of companies were there, and there was a sell off there just because of this reason. And egg prices also lowered from those peaks of 2016-17, peaked out in 2017 February March, and then the prices started to stabilize and come down. And so the stock started to come down, and the numbers showed that the surge in the numbers before was because of the egg prices, etc. So numbers started declining, and then shutdown of the markets also hurt the company badly, and it was evident. And the stock fell from around 1100 in around February to 560. So it was a dramatic fall. Numbers were lower than expected, and hence it kept on selling, the market kept on selling such stocks. But then, why the surge happened from March onwards? What were the reasons? So basically, first of all, valuations became very attractive. So at around 4600 in 2017, the stock was trading at over 100 times earnings at that point of time. I think around 60 70 times, not 100 times, but 60 to 70 times earnings. But this time around, with such earnings of around 30 odd crores for the September quarter, we could be looking at much higher EPS for FY22. Let's leave 21 alone. Even in 21, if December does another September, then we'll have big surge in the FY21 numbers as well. And that's why the stock is just storming through the roof, and from 500 odd levels it is at 1660, 1670. Yeah, I won't be surprised if it takes out 1900, 2000 in the next month. But take your own call, disclaimers apply, but the numbers show a picture where the stock should be much more higher from there. People are ordering more packaged food and items, and we are seeing that that was not quite envisaged in February and March. People thought that there'll be less delivery because individuals at home will not want people coming at home and delivering from outside, means still viruses, etc. So they'll cook at home. That was the first indication. Or they'll might order just cakes, biscuits, etc., rather than food products, like you can say cooked food products, etc. But things changed, and we saw what are the numbers with the pizza company that is listed, Jubilant Foodworks. We have seen now with the numbers of Venky's and another packaged food companies here in India doing extremely well. So, as I mentioned, ordering of food has surged, which was not quite the fact when the shutdown happened, that people thought it will not happen. And that led to a margin expansion, a tremendous margin expansion in the September quarter. So what we have seen is 20% net profit margin compared to something like 15 17% net profit margin for the September quarter last year. That is a that is tremendous, 300 basis points margin jump year on year. And the stock, the best part is that the stock is down still over 60% from the peak of 2017. I won't say that it will go straight away to 4500 5000, but over the next 2 3 years, if another couple of quarters and come out good, and I believe that once things normalize even more, this habit of ordering at home, this habit of buying packaged foods from malls, etc., will continue at least for 1 year more, 1.5 year, as long as everyone is vaccinated globally. Kindly write in the comment box what do you think about this. I still believe for the next 1 year this overhang of this virus will continue, and hence, in my opinion, such kind of packaged foods which are doing well, or products that Venky's is producing, I think will continue to do well. The numbers suggest that, and probably one more year of good, and you can say 4 or 5 quarters would see the stock go past 4600. That's my assessment, at even at 1650 1660. So the stock is down 60% from the peak is a positive, and poultry prices are cyclical in nature. You have to take that also into account. So the December I'm sorry, December quarter should be the best for Venky's, and to an extent the March quarter, because the March quarter got stuck with whatever happened in March, and then you'll see the effect of the shutdown that took place this year kick in with the positivity in the June and the September quarter next year. So all in all, taken together, next 4 quarters look extremely good for the company, and hence I believe that the surge has taken place in the stock and the stock may continue to rise. So what needs to be done? In my opinion, it can be accumulated on decline. So you can buy few 10-15% right now, probably on declines to 1400, 1450, and even 1300, 1350 can be accumulated more. I can't see the stock go below 1320, 1330. That could be a stop loss for you from a long term point of view. But I think if things really go bad, say the market fall a lot, and you have a situation where the stock is down 20-25% from current levels, those will also be attractive levels to buy, because the company will keep on doing business as usual. It doesn't matter where the stock price is going, and that would be opportunity to buy at 1300, 1250. So for somebody who wants to buy a mid cap company, want the surge, and we have seen mid caps go up, but be sure that next 2 3 months could be difficult. So you might buy at 1600 and you see the stock at 1200, say in 2 3 months time in March. That is not to say that the stock will not go beyond 4500 in 3 years. So have a 3 year time frame, accumulate on declines current levels, and be patient with the stock. Let's look at the numbers of December and then decide. So a risky kind of a buy after the surge has taken place, but it looks a calculated risk that can be taken, but put less than 5% of your total holding into such stocks. So this was my video on Venky's. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.